Hey everyone. All right, let me get the link for this stream shared. This is it here. Hope you're all doing well. I have to share this in a few places, so bear with me. And finally, Twitter. Hey everyone. All right, looks like people are finding their way here. Yeah, so let's go over, let's start off by going over Bitcoin. There's a couple things I'm looking at. One, we had a ton of longs opening here. We do have some bearish absorption forming, but this is an example where I don't really expect it to play out. It's pretty likely we take these highs, I think. We had a ton of longs open in this candle with a 16 million positive delta. So I'll kind of give you my basic plan where I might be interested in a hedge short. I'm positioned long off the POC. If you've followed some of my updates, this is a level I was interested in longing. So we swept these highs. I missed this short, but I longed pretty aggressively off this level, although aggressively just with the initial reaction. As soon as I saw that bounce come off the level, I opened my long. But I would like to add to my long. So I'll go over a couple of those ideas, but first I'll talk about where I might be interested in taking a hedge short. Someone's saying, careful, Twitter overlords are watching. Yeah, I think I'm allowed to share YouTube links still. So anyways, I think this, in the same way that this point of control is really important, let's pull this over the range, where we got this bounce. This point of control of this range, and you can just pull it over this range, is very important. And so I wouldn't be surprised to see a reaction there. And I'd be interested, especially coming into the weekly close, or the new weekly candle rather, if we could push up, open up this new weekly candle, and then make a new high into this level. A sign of weakness would be to come back below this wick, hedge my long position, and the idea would be to add to my longs on a sweep of this low. That would be the ideal scenario for me. Of course, there's plenty of other ideas. Say we don't get this push up. Well, there's probably a local idea where we could come down. Let me get rid of these brush marks just so I'm not filling up the screen with them. There's an idea where we have not had a golden pocket retracement yet locally. And we have a very clear low time frame scalp idea of just coming in and sweeping these lows into this key level, reclaiming it. And this could be a potential setup for a long as well locally. But I would prefer to sweep this low. I really would. And one of the reasons that I think it more likely that we do than not, although that doesn't mean I'm closing my long, is, here on ETH. I would really like to see ETH come down and sweep this low. We've front ran it so far. So, this could take a little bit of patience, but, maybe we push up and test the point of control here and then come and sweep the low into the 786. The 786 is a very important fib for ETH. And I wouldn't mind sweeping this low into it. So, this doesn't necessarily mean, like, there's cases where ETH could have a pullback like this and Bitcoin could still hold its current low. But I am interested in longing an idea like this off of ETH, interested in adding to my longs if we can sweep this low and reclaim it. Yeah, So anyways, I think Bitcoin's pretty straightforward here. Obviously, if we start breaking down this point of control and flipping it to resistance, well, that's relatively bearish, and more likely we start testing the liquidity of these lows. So, beyond this current level holding up, really just watching these two major lows. There's no way to know what will happen, just playing the odds. But looking for this price action, we're worth noting that we also are at the major 618 here from this low. So this is an important level. It had been front run before. We've tapped it. And my plan going into the holidays is, well, I'm not going to be, I'm going to be spending time with family, taking some downtime. There are still some trades I would like to take. I'm hoping to hold along into, this level's not on my chart right now, into this level, 19,200. This would come in around Christmas Day, would be the ideal time to hit it for a few reasons. But even if it's Christmas Day, I might not be doing a ton of updates in the LAATF members group or anything like that. I might say if I took the position, but I would trade this even on Christmas Day. And I would just keep it simple. I'd take the position if there's some weakness here, take a short, and hopefully trade that down into a sweep of these lows or these lows into the new year, and then look for another long. I wouldn't close my entire long here though. I'd probably close a good portion of it though. Yeah, probably somewhere in the realm of 70 to 75%. But I am going to be taking a short, so there's going to be a hedge element here, covering some of my long. BNB obviously getting a nice reaction here. I'd pointed out that we were coming towards the 786. We did wick through it a little bit. This is something I want to talk about. I've talked about this so many times. For some reason, I rarely, I need to get better at showing this idea before it happens. It is very common, and I could go over like 20 examples on Bitcoin. So let's just say we've front run the 618 here on BNB, which we did it back in time. We'd front run it. Well, it's so common that the new low that comes in makes this high, the 618. So it's sort of like projecting a future low by making the last pivot, the 618. It happens all the time. And it's actually a cool way to potentially find new lows. So the idea would be, well, if you're breaking down here, you don't need, and this should be used with Confluence, obviously, but you don't need to have any other information other than dragging this line down, making this the 618, and marking it out. And then if we replay here, but over the last year, I've pointed this out as something I've noticed happening all the time, and that gives you an idea for the new low. But it does happen very, very regularly. Yeah, I was going to maybe take some altcoin requests. I'm not going to do a ton of it, but I would do a few. So, I'm not looking for low cap, brand new random altcoins to analyze here, but I will take some altcoin requests if you guys are interested in that. We can look at some charts. Just going to do a couple here. All right, we got Matic, XRP, Link. We'll do a few of these. Yeah, so XRP or Link bouncing off the 886. I'd taken a long off of the 618 here. So this was a level I'd been waiting for a long time. We finally came down and tapped it. This was a little while ago. And I just used a local swing failure idea here. Was waiting for this level to be tapped. We did get a decent bounce here, almost 3%, I think, from the low. Maybe a little more, 2.5%. But yeah, then obviously we we back tested some resistance and just dropped off a cliff. You know, when people want to, just from like a structural perspective, you know, people want to say, what do I think of Link here? Well, everything's going to be, Link is, you know, let's just delete a bunch of TA here. It's at the 886. It's very close to its major low. There's really two ideas here, which is to have a long off the 886, or to, or if we swing failure the low, to long that. But if it's going to behave similarly to Bitcoin in terms of trajectory of price, well, if Bitcoin bounces here, alts are probably, for the most part, going to bounce here. Yeah, there's not really, you know, there's probably some really sensical ideas here. Even like this, right? I mean, you could wait for a retest of these lows, obviously. It's probably likely we do. Don't know if I'd necessarily just enter here randomly. But yeah, I would just take into context where Bitcoin's probably the most important thing to watch. I guess one thing I would say is when it comes, like sometimes I'm surprised. Not, I don't know what's the right word, but people will ask me like, what do I think of this altcoin? And it will be something like this: a range. It's at the range lows. I mean, you either hold the range lows or you break them. There's not really anything. There's not really any reason to complicate the message here, right? If you want to take a long. If you know, and validation's pretty clear. The only kind of ideas that would make sense to trade are, I mean, you could go key fibs. I mean, probably likely we sweep this low, to be honest, but we may not. But anyways, the longs are pretty simple. Long the range lows. Your invalidation is the range lows. If you swing failure the range lows, then that's a long setup. Whether or not we sweep them, I don't know. Be relevant to have an alert set here, which I'm going to move this alert here. I'd be a long setup, low risk. But yeah, always look for clearly defined ranges. Because this is, you know, for example, this would be an example of where if you were waiting to short the sweep of this high, well, then you're going to probably miss the position, right? And so you miss the short. Same thing is there's a potential, if you're waiting for a sweep of the range lows, you might miss a long setup. I did say, you know, in the members group, when I was asked what I thought about different alts, if there was some different ideas being shared. And I said, as Bitcoin was coming down, well, I'm probably just going to wait to long any alts that I'm interested in until we tap the point of control on Bitcoin. And so some alts, I mean, alts just bled heavily as Bitcoin came down here, and almost all of them just bounced at the same time as Bitcoin. So, I mean, I would say that the vast majority of the time, you know, if you're trying to get some semblance of an idea of when it would make sense, oh, we have a breakout here on Bitcoin, that's kind of fun. If you're looking for some to form some semblance of an idea for alts, you typically should be taking Bitcoin into account. Let's just get rid of everything here and turn on the low time frame idea. Let's see if we hold Yeah, so this is a instance. If we swing failure these highs, I have very little interest in shorting here, because the weekly close isn't for another hour and a half, 2 hours, 2.5 hours. Nice volume coming in here. Lots of shorts just got stopped out. Let's see if there's some confluence with the timing of this channel. Not really. It's not pulled perfectly here. I'm just getting a rough idea for a channel. Well, let's take a look at some other. Let's look at Matic. Matic has a pretty simple idea here. Just coming in and tapping the golden pocket, sweeping these lows. That makes sense. We were holding this channel for a while, but we have obviously lost it. And, you know, sweeping these lows, reclaiming them, that could be a perfectly reasonable long setup. I'm noticing a lot of alts seem to want to go lower. FTM tapped the golden pocket. I was looking for this long setup as well from up here. Didn't play out perfectly, but the idea was to come up, retest this level, come down into the golden pocket. We obviously had a nice rally before that. I am much more interested in Bitcoin personally, Bitcoin and Ether. I'm not going to pull up EXO. Someone asked if I could pull up EXO. It's just, I don't have it set up on my live stream dock here right now, so it's just kind of a pain. I think this is from a video where I was doing a bunch of log scale examples. But yeah, horizontal, there's a key horizontal down here that'd be nice to sweep on AVAX. We're obviously on the 4-hour, we're very near the range lows. I think the two most logical setups would just be to either sweep the range lows or to sweep this high time frame low around $9.32. And when I say sweep it, you know, sweep it, reclaim it, that could be a long setup, or sweep this level, reclaim it, that could be a long setup. I assume I have alerts set on some of my folders here, but in one of my different profiles. You want to kind of keep an eye on this Bitcoin move. So this would be a technical swing failure. We ripped a bunch of shorts here. I wouldn't mind pushing up higher and filling this wick. Maybe we get some volatility here into the weekly close. But the short I'm interested in, like I said, is to tap this POC, sweep this high. I don't think this channel in this setup would remain relevant. Someone's asking for near. Near had a really nice technical rejection. It's an old setup. So near was in this ascending channel. We had a swing. Anyways, near has actually been really technical. We tapped this descending channel on the 4-hour pretty cleanly, which also coincided with the swing failure. And then we came back and retested the 786, which alts really liked. This was when Bitcoin was testing the range lows, I believe. And we swept this wick. This was I actually took this long setup. Somebody was asking me in chat what I thought of near here, and I'm like, I mean, this is a pretty tight invalidation long. Then we came up near this ascending channel into the golden pocket from this pivot high. But near has broken down some important support. I think it would make sense to, I mean, you could try to look for scalps in this local range. It makes sense to let price action develop here and then get a retracement. But again, you know, depending on what Bitcoin does, alts are probably going to follow suit. I don't think I have any deep price history on this pairing. Yeah, but I really am personally just interested in playing Bitcoin and ETH here on a more medium and high time frame accurately. I'm not particularly interested in opening up a bunch of alt positions because I have these ideas where ETH or Bitcoin could be playing some major support here. I'd like to play these pivots accurately. Oops. But I would say, you know, if you're interested in, I'm actually going to lock this. If you're interested in alts, you know, yeah, look for local levels of importance. And then, you know, I would take Bitcoin into account. Is Bitcoin holding important support or resistance? Is it losing it? Is it coming to a key level at the same time as your alt setup? This isn't a hard rule, but I would say probably 90% of alts, if you had no TA, I'm not suggesting you do this, but if you had no technical analysis on your alts and you just long them when Bitcoin bounced off the POC, you would have ended up in great positions. I would recommend being aware of the technical levels your alts are at, but that's why I personally think having solid Bitcoin analysis is probably the most important thing to have in alts. I mean, so there's this idea, somebody mentioned it the other day. They were saying they noticed that Mask was seeming to front run Bitcoin. So like it would start moving before Bitcoin, then Bitcoin would move. And so I have my own kind of logic and theory about that. Alts typically move in sequence with Bitcoin, but not at the same, like for example, it's very common if Bitcoin has made a golden pocket retracement that Ethereum is going to make a 786 retracement. at the same time. So that means it has to move, it has to retrace 78.6% of its last move in the same time frame that Bitcoin has moved 0.618 or 61.8%. That means it has to at some point be moving faster than Bitcoin to get to that key level at the same time as Bitcoin has hit its key level. So at some point it needs to front run Bitcoin, right? It has to, because it has to cover more distance relative to its chart than Bitcoin. And so if you think about that with any alts, most alts will move more than Bitcoin, but still interact with technical levels. So for example, in order for ETH to hit its range highs, it needs to move further, although I don't think the timing was the exact same here. It needs to move further than Bitcoin in the same time frame. So it's got to front run it. That's the only way for it to do it. How can ETH get to its key technical target at the same time as Bitcoin, so that they pivot at the same time, unless it front runs at some point? So that's going to happen with a lot of alts. You'll start seeing alts moving before Bitcoin. And it doesn't have to be right before, but just generally they're working towards their key levels faster than Bitcoin is. And it has to be that way. I can't tell you how many times I've seen alts make their range high, range lows, 786, 886 retracements when in the same time that Bitcoin's hitting a golden pocket retracement. And if you understand these retracements, they're relative percentage of low to high. So you're oftentimes going to be finding alts front running Bitcoin, which can be a leading indicator in a sense. But you still want to be trading those ideas with care. Someone's asking, why does price always move towards technical fibs? Is it bots or an algo? I don't think so, because price moved between technical fibs in the 30s. So, you can go back and back test. I mean, a lot of, think about when Elliott waves were developed, right? 100 years ago. I think that the reason price moves, I don't know if I've ever explained this properly, but, I think price could be viewed as a map of human psychology. You could simplify it with saying like fear and greed and all those things. But there's an idea like what, I guess, yeah. If you look at golden pocket retracements or key fibs and you look at order flow, you'll often find the most shorts start opening here. The most short longs open here. The most stop losses are here. The human behavior is always the same across any asset, across any chart. And how could it be a coincidence? Because a bot can hold up price or push price, but a bot can't make you open your short here, right? So when you look in order flow and you see over and over and over again the vast majority of shorts opening here, that's not an algo. That's human behavior, right? Because it's not an algo opening shorts here. It's retail. And it just so happens when you come to key fib levels, you're often seeing the vast majority of shorts open at the lows, the vast majority of longs open at the highs, and then they get squeezed out and wrecked. So yeah, I would just say that my sense would be it's not an algo that's moving price between key fibs, it's human behavior. And then you could kind of go a step further and say, well, price action is naturally optimized towards liquidity because that's how it moves, right? You need positions to fill. So you could make the argument that Fibonacci retracements just so happen to be these price action pivots that optimize for liquidity. And so regardless of what, so let's put it this way, regardless of what the algos are trying to do, if they're trying to generate liquidity and they see the majority of shorts open here or the majority of longs open here or shorts get stopped out, that's the optimal place to reverse price. And if it just so happens to be on a fib, then great. And maybe algos are just optimized to fibs now but that would be more observational. I think they're optimized towards liquidity, and the liquidity oftentimes just happens to be generated on fibs for deeper reasons than, it's just algos pushing price. And I hope that makes sense. It has nothing to do with an algo that people are getting stopped out and shorting here, stopped out of longs and shorting here, because algos don't control your positions. Do I think, yeah, I mean, I do think that humans just, someone's asking if I think that humans just act on these levels. I absolutely do. There was many hundreds of millions of dollars of longs opening at these highs both times. This was just a clear golden pocket. Hundreds and hundreds of millions of dollars of longs opening here. And that's just, it has zero to do with an algo. Those are people opening a position against resistance. And that's psychology. That's FOMO. And you'll see it over and over and over again. We can go to Tesla, which is breaking down this support. This was from an example, but let's look at algo. Let's look at algo. Let's look at Tesla here. So we have a pivot low, we put in a high, golden pocket retracement, back into the golden pocket. This kind of was annoying. Last pivot high, 618. So we got about a 20% bounce off this golden pocket, and it was a retest of this key horizontal. But you'll notice on all time frames, price commonly bouncing between these levels. Obviously, it's very possible that this fib could be pulled from here. Could start getting into some log charts as well. But another point would just be you can go back and test price action 70 years ago, and you'll find the same thing. So algos weren't very prevalent then. Someone's asking why are so many people opening longs at resistance, and how are so many positions opening? I mean, it's FOMO, right? People want to catch these big moves. There's the common, saying on Twitter, show me a new high, I'll show you a new buy. People don't understand that breakout trading, although it is a thing, maybe they take 5 minutes and read about it. You can be profitable breakout trading, but not longing here without a stop loss. 70 to 80% of your trades are going to fail as breakout trades. So yeah, I mean, you will find the majority of longs opening at resistance and the majority of shorts opening at support most of the time. Nobody wants to short the highs here. Everybody wants to long this. Everybody wants to short this. And it's because people are caught off guard, right? Everybody's surprised that price has bounced. Everyone's surprised that price has rejected. And then they're counter trading their initial thesis, which was, I think price is going to go up to 25K. And so they're longing here. It breaks down. They're like, oh man, it must be going to 10K. They're shorting here. Oh man, I was wrong. I got squeezed out. It must be going to 25K. The long resistance again. Someone's saying, do I think market makers have anything to do with those longs at the highs? I'm not sure what you mean by that. I mean, in terms of, like, do they have anything to do with, let's say you open a long at the highs. Do they have anything to do with that? I don't know. Not really. I mean, other than you're being manipulated emotionally. Someone's saying, do I get a notification on my phone and just jump in? It depends on the setup. I mean, if I don't have the option to be at my computer and I really want to take a position and I see a rejection, say here, then I will do that. But typically, I have my alerts set before the levels tapped. I come down, sit down, and I'm watching price action. I'm typically near my computer. Sometimes I'm not. Okay, I'll just read a few. I missed a bunch of questions here. Someone's asking, I have a long on Bitcoin at 16,600. I don't know when it's right time to add and take profits. Well, yeah, I mean, you want to have targets in your trading plan. You want to look for signs of weakness. But so that's a big thing that's come up over the last couple of days is when would I add? Would I add here? Would I add here? Have I added yet? I'm gonna pretend I'm not in a position and I'm gonna add at support. The absolute requirement here would be probably for us to sweep these lows for me to add locally. But yeah, I'm gonna trade it just like anything else. Just because we've gotten a reaction doesn't mean I'm just gonna start adding here onto my longs. I'm still gonna wait for retracements to support. I'm not gonna long local resistance or high time frame resistance. There's no reason because the probability suggests that price will retrace to support over and over and over and over again. It may be higher support. It might be we get a big push and then backtest the POC. I'd rather long that than long here, just because it's a higher probability position. Someone's asking if I use order flows Confluence. I do, yes. Typically, I'm just looking at open interest and volume delta. You can use, there's coinanalyze.net, there's exocharts, there's gocharting.com, which has most of the data that exocharts has for free. CR charts, Addis. I would say it's easy to get buried or caught up in the weeds when you're doing order flow stuff if you don't know what you're doing. If you don't understand it, it's easy to misinterpret the information. I think looking at simplifying the data is best. Someone's saying, can you explain how we add? I'm not sure what you mean. Do you mean just like how do you add to your position? Like tech? I'm not sure what you mean. Explain how you add. Like if you wanted to add to a position, you would just open a new position. But can I be honest? If you're asking a question like, can you explain how to add to a position? You probably shouldn't be trading with real money. And that's not a dig or anything. Most people shouldn't be trading with real money. There's plenty of time to learn and develop skills. If somebody, and again, this isn't a dig at you. This is, I think, representative of a lot of people, because you've said you're in a long here, you don't know, you're confused when to add, how to add, you don't know when to take profits or add to your position. How do you add to a position? You probably aren't at a place to where you should be trading, honestly. You should be paper trading and developing certain skills and a foundation, because it makes no sense to be in a meaningful position in terms of capital risk when you don't understand these things. Because what's the point? You might win some trades here and there, but you're going to find yourself in nasty situations more times than not. So someone's saying, so we expect the comeback to the range POC to open the longs. The best way to answer that is just my philosophy in general in trading is, it's not that I expect it. It's that if I get it, I'm going to add to my longs. So like, for example, do I expect price to go up here? I try not to frame my thoughts like that. If we go up here, I'm going to take profits on my longs, and I'm going to look for short positions. It's just if. Trading plans are usually if and trees, right? They're decision trees. So you mark out key levels. If this happens, then I'll do this. If this happens, then I'll do that. And in the meantime, I'll just wait. I'm not trying to trade random positions here. I wasn't trying to trade random longs on the way down. I literally said up here, the only long I'm interested in is a retest of this POC. And that was when price was, did I think price was going to drop 8% straight down to the level? No, I have no idea. But if it does, I'm going to look for longs on the POC. And it did, and I longed. Someone asked what my thoughts on Binance FUD going on right now. I don't like Binance for a lot of reasons. Do I think it's going to collapse? I have zero idea. Probably not likely, but I don't trade on Binance regardless. But no matter what exchange I'm on, I'm not putting all my funds on an exchange. And I've talked about this many times. Leverage is a tool to manage your risk, which is your exchange risk. You don't need to have all your funds on an exchange. If you have $100,000 you want to trade with, you can put a percentage of that on an exchange and use leverage to represent the $100,000 and withdraw or deposit funds as needed. Most people would use leverage to trade way more money than they have, which isn't an appropriate way to use it in my estimation. But so I don't really care. I accept the exchange risk no matter which exchange I'm on, which is Bybit. And I use leverage to manage that risk. Would it suck if those exchanges that I was on went down? Absolutely. But it wouldn't be devastating. Someone's asking how the paper trading platform is coming. It's coming along amazingly. I'm so excited about it. I think it's going to be an incredible learning tool. I think it's going to be a ton of fun. The end goal is to have it just be a full suite of tools to develop a trading system, develop yourself as a trader without putting capital at risk in a way that's rewarding, that's fun. And ultimately, I have some ideas of how this could pan out. I would like to have, we will have trading competition seasons where you're trading on these paper accounts and you can earn rewards. And on one hand, I want those rewards to be meaningful and significant. On the other hand, I want the focus to be on learning and developing yourself as a trader. But I think there's something cool about having a balance between not having all your capital at risk, still being able to earn rewards. So there still is an emotional element to your trading. You can still win and lose in a sense, because you're competing against other traders and earning rewards based on your performance. But yeah, there's going to be we're going to push some major updates to the beta version of the platform, which is being tested right now. And then I'd hope to do an open beta where anyone who wants to can join and use it. We'll make sure there's no bugs. We'll add features as needed, and then do an official launch. For those that aren't aware, I'm working on developing a paper trading platform, which is going to be cool. Just catching up on chat really quick. Someone said, like in the position, this is the person that was asking about how to add. So they're saying, like in the position 16,600, I have put $100. And let's say we go to 17,500 and I take 50% of my profits. If the price retests back, let's say to 1,700, how do I add? The position is buy bid. You just open a new position. I mean, it's going to average out your entry. So it's going to average your entry between 16,600 and 17,000. Let's say it averages it to 16,800, but you've taken profits at 17,500, so those profits offset. In that situation, you're much better off to have taken profits and added. If you take profits, as long as the price movement has gone beyond fees, if you take profits on longs, say you took profits here, anywhere you add lower than here you're better off. Even though it brings up your average entry, you've taken profits higher, which offset the risk. So yes, if you add back to your original size, anywhere you've taken profits and added back lower, you're better off for having done it. Okay, what about the bear scenario with the bear flag and going to 14,500 with a projection? Yeah, I think the bear scenarios are pretty clear, which is rejecting from anywhere. This could have been our major rejection. I would still, even for my bear scenarios, prefer to see this level tapped. Just that point of control is so important. But it's just a fractal version of what we're seeing. You could flip this upside down. A break of the level, a retest, a bounce. Flip it upside down, a break of the level, a retest, a rejection. And you're saying 14,500. Yeah, I don't know. There's really important levels down around 11,000, 10,000, which would look like, here, let me go over to a deeper exchange here. Deeper price history. So this would be a log scale idea. Let's go to the daily chart here. Where we have our log scale 618 from this low. We have this ascending trend line idea. We have important fib time. This is all around the first week of January. So this would be my bearish idea. We have a descending channel on log scale. And they all intersect right around here. This yellow line is just an alert. But, a move like this would be really interesting to long. Or it could look like this. There's a lot of time here. So, it doesn't look like a lot, but we have a few more weeks. So something like this is certainly possible. But there's a ton of confluence here. And for some, it might be confusing. Why do I have charts with plans for going higher, charts with plans for going lower, is because I don't know what's going to happen. I just want to be prepared for whatever does. I want to have solid technical ideas. So I have lots of folders, lots of different ideas. Folders like this, and then the idea I just shared. Someone's asking if I have open positions right now. Yeah, I have longs. Someone's saying if they add to their position, well, it's the same guy that was asking about adding. If they add to their position at 1660, the whole position will move. Yes, it does, but it's not technically changing anything. It's just showing you your average entry if you average the two together, which doesn't change anything. It's just a different way of looking at the same thing. If you had two separate positions open at different prices versus showing, or it just told you what your average entry would be if you average those two together, there's no difference. It's just a different way of looking at the same information. Does anyone know if you can KYC on Bybit if you're in the US? This isn't advice in any means, but there's many people who use VPNs, but if you're in a region that isn't supported by Bybit, I don't think you'd be able to KYC. Yeah, someone said just because of the fact that everyone is watching $10,000, 10K, I think 14K is a good price for the bottom with also a strong Elliott wave analysis. It could be, but I think in the case of a bounce from 14,500, you could just wait for some signs of strength. And you wouldn't necessarily open your long at 14,500. You could wait for a bounce, a retracement. In a way, there's no reason to speculate like, could we go to this? We can go to any price. I like to be aware of key levels and see how price interacts with them. The reason I've been so interested in longing this POC since we pushed up through it and we did front run it, is because it's an important level. It's a very common progression of price for price to reclaim a point of control, then come back and back test it and bounce. So I'm always looking for those opportunities. And then again, we're just flipping that same idea in reverse. There's a point of control here. We've lost it. It's very common to retest that point of control before a continuation. That's why shorts here make sense. That's why longs here make sense. Am I going to be thinking about what I'm going to do if price breaks down? Absolutely. But I'm going to have plans, but I'm not going to spend a lot of time thinking about it until we lose this support. If we're holding that support, there's no point in thinking about it too much. And then on a lower time frame, if I'm scalping, I'm looking at this point of control, I'm looking at other technical ideas, and I'm not going to start thinking too much about what I'm going to do at 25K until we start claiming some of this local support. Or resistance, rather. I don't use, someone's asking if I use EMAs. I don't use EMAs. I prefer things like parallel channels, key horizontal levels. I use the VWAP, which is kind of like an EMA, but it's weighted with volume. So, having the VWAP pulled is oftentimes nice. And then you can do your anchored VWAP, which you can anchor it from wherever you want. And I think that can be really useful. I'd rather have it weighted with volume. And so it's another way of looking at, your look with volume, point of controls, key fibs, parallel channels. You're taking into account the trend of a price, you're taking into account the volume and technical retracements, and then anchored VWAPs take into account those things, but take into account volume. Interestingly, we were bouncing off this anchored VWAP nicely, and we did just reject from the anchored VWAP from this low. Someone's asking where I'm pulling the volume point of controls from. It shows you here. Or sorry, the volume profiles. It's pulled from here across to there. Wherever the profile is anchored is where it starts. And wherever the point of control ends is where it ends. Then you can see the profile here showing the distribution of volume. Someone's asking if I work with value areas. Yeah, value areas are important, but should be used with confluence. Well, yeah, this is kind of like just a hangout stream, I guess, just watching price action. I'm not I'm gonna relax for the holidays a little bit. I'm not planning on spending, every day on the charts. I have family coming to visit, so. But still going to be willing to trade my plans. Oh yeah, somebody Calviziax asked, when you hedge a short/long, do you usually use the same position size you're in, or an original position size with 1 to 2% of your portfolio? Just to be clear, I'm not trading 1 to 2% of my portfolio when I'm saying 1 to 2% risk. I could be trading my entire trading account in a position with a 1 to 2% stop loss. So just to be clear about that. But when it comes to hedging is typically you're hedging out your entire position, and you're not usually hedging with a hard stop. So if I'm long, say I have a $100,000 long here, and I want to hedge the position here, I'd hedge $100,000 short. If I want to take an active short position I can trade that in as well as my hedge. So in a way, you're taking on more risk, but some of your risk is hedged up by a long. And maybe the active short has a hard stop, the hedge does not, and you close the hedge if you reclaim an important level, and maybe you have a hard stop here for your active short. I love these questions because they are very indicative of like the common mindset. But just to tell you, it's not how I think about things at all. The question is, which will be your favorite altcoin for the next bull market for a spot? And, that's sort of like the general thread you see on Twitter. The top altcoins 100x to hold through the next bull market. And I I don't analyze the market that way and think of it that way. So I'm a technical trader. Yeah. So to answer your question, I don't have an answer. Someone's asking, what is the advantage of hedging a position versus closing or reducing your position? Well, let's say I have a swing long from here. I have a lot of options on how I want to interact with all the levels between here and say my target's here. Now, if I want to hold the majority of my position to here, well, I can do that, but we have to break through a lot of resistance on the way there. If I close my position every time we see a little reaction off of resistance, then I'm in this awkward position where I have to think about how to get back into it constantly. I'm trying to target up here, and if I'm constantly closing my long, where on the other hand, it's sort of like I took longs from down here. Well, I might be interested in shorting resistance, but I don't really want to close my long every time there's resistance, because now I'm in an awkward position where I have no longs. And what if we see a little rejection and then we break out and then I'm opening a long, but it's a swing failure, and it's just weird sometimes. So I'd rather just think of them as separate positions. I have my long, swing long, and I want to add to it at support, but that doesn't mean I don't necessarily want to short resistance, which can hedge out my long positions. Yeah, because it's not uncommon to end up in weird situations where you've closed your longs and then this happens and then you're trying to chase the move. Someone's asking on what scale, log or standard, is better to put fib retracements. It's all relative to what you're trying to do. Typically on higher time frames, log is more relevant for pulling technical levels, especially when there's been huge parabolic moves. On medium to low time frames, I prefer standard. Someone's asking, how do you determine if a point of control gets lost or reclaimed? Just like any level. I mean, if this is the point of control, too many brush marks. If this is the point of control and price loses it, I just got to get rid of these. They're piling up. And then back tested as resistance and rejects. Well, it's lost, but that doesn't mean it can't be reclaimed. But when price is below and rejecting, we've lost a point of control. When price is above and reclaiming, we've reclaimed the point of control. The thing that's hard is, you can lose a level, you can reclaim it, but what you're trying to do is find the most relevant levels. If the levels are relevant, then it should be significant if you've lost or reclaimed the level. If it's irrelevant, then you're kind of in a weird position. Like, we had some nice interaction with the point of control here, but it's also shifted because the point of control shifts as new volume comes in. Yeah, I don't really understand this question. Somebody's saying, I think it's not profitable to make hedges with small amounts of money. What do you think of this? Um, it's the amount of money you're trading with is irrelevant. I mean, you should be thinking about the percentage. You should be thinking about the percentage base move relative to your account. So, like somebody would say, I can't use risk management because my account's only $50, so I can't make a lot of money using risk management. Well, yes, your account's only $50, so you're not going to make $1 million a year trading, but you're going to blow up your account if you don't use risk management. You won't make any money. You'll just keep losing money. So if you're saying you can't make, it's not very profitable to hedge, it's no different trading with $10 million or $1 million than it is trading with $50. Like somebody could say, it's not profitable longing the point of control here with 2% risk because my account, it's not very profitable because my account is only $50. But that doesn't mean you shouldn't use risk management because your account will never grow and you'll never develop good trading practice if you don't use risk management. My opinion on those who have small trading accounts is size will come. Over time, over years, you need to be developing a good trading system and practice and habits. Don't think about your account in terms of its dollar balance. You should always be thinking about your risk as a percentage relative to your account, the growth of your account as a percentage rather than in dollar terms. And so if you think about it in percentage, like for example, if I say I put on 1.5% risk to my account and I just booked 4% profit to my account, and somebody says, yeah, but what's the dollar amount? Because if I did that, it would only be $8, and it's like, so did you do it with $1 million? It really doesn't matter. Like you can't be thinking in terms of dollars because then you're going to start taking on obscene risk because your account's small. And if you don't know the mathematics behind risk management, you're in for a lot of trouble because it doesn't matter how big or small your account is. Your risk needs to be a percentage relative to your trading account. And it can't just be a dollar value. I'll answer a few more questions here, and then I will wrap up the live stream. So somebody's saying, what is the profit taking strategy as you long and short? Do you target percentage gains? No, I target support and resistance. Because if you think about it like this, you're kind of going, you're adding risk, you're reducing risk, you're taking profits. If I was in no position up here, would I say I'm going to open a long when price goes 7? Would I take off all my TA and say I'm going to open a long when price goes down 7%? Then I'll open a position when there's a 7% move down. No, that doesn't make any sense. I would have my technical level. I'm interested in line the point of control. So in the same sense, why would I suddenly start taking profits based off of a random percentage? I'm going to open, let's just say, for example, I opened a long here. And I say, well, I'm gonna take profits when price goes, this will be a good example, when price goes 2.5% away or up on my position. That's just a random arbitrary percentage from where I opened a position. Why wouldn't I say, well, I want to be aware of this point of control. I want to be aware of this idea. If we get a rejection from there, this percentage, yes, it's a nice whole number, but it makes more sense to have a technical profit-taking level based off of a technical resistance rather than an arbitrary percentage. In the same way that I'm not going to open positions based off of arbitrary percentage moves. It's irrelevant, how far prices move on a percentage basis from your entry. That's arbitrary. Someone's asking, how do you decide where the range begins when you are using fixed range volume profiles? Well, I think depending on where you're pulling them, ranges are usually pretty clear. Like, we have an impulse, we range, we impulse. This range looks pretty clear. This range looks pretty relevant. I mean, in this, if you're doing it on a low time frame, this range looks relevant. And as the range develops, you can just keep repulling your volume profile. I was aware of this because this was our point of control on the broader range. This was our point of control on the local range. And we did come back here, impulse, tap the point of control, and then impulse again. But yeah, I guess just based on price action, ranging price action, to me, it seems pretty clear where the range is. This is a broader range. This is a local range. This is a local range. Someone's asking if 1 to 2% per trade is the best risk management. Typically, it's very hard to get beyond 2% risk, just mathematically, and still have the risk management make sense. If you start running the numbers, say you take 1,000 trades, what your expected loss streaks will be and expected drawdowns will be, you'll find that you need an insanely high win rate to start risking 5% per trade. So mathematically, there's very few systems that I'm aware of that are going to excuse risking more than 1 to 2%. Because you have to understand that, say you have and I don't know all the numbers off my head, say you have a 65% win rate. That might sound really good, but if you take 1,000 trades, you have essentially a 100% chance to lose 8 or 9 trades in a row. So that means that if you're trading with 5% risk, you essentially have a near 100% chance to have a 50% drawdown on your account. But if you're trading with 1% risk, then yeah, you're probably going to see a 7 to 8% drawdown at some point over that large set of trades. And if you don't understand why that is, I mean, I have some content on that, but it's just math. It's the law of large numbers. So probabilities, you have to understand not just the probabilities of a single trade in your system, but the probabilities of losing and win streaks over a large set of trades. Because it's easy to think of it in terms of a coin flip. If you flip a coin, you have a 50-50 chance of going heads or tails. But we all know there's higher than a 50% chance if you flip a coin 100 times for it to land on, intuitively we know, for it to go heads 2 times in a row. You wouldn't be surprised to see that at least once if you're flipping a coin 100 times. And if you flip it 1,000 times, you'd expect, it's probably likely that it lands on heads if I flip it 1,000 times more than once or twice in a row. And what you'll come to find is, yeah, there's essentially 100% chance it's going to land on heads 8, 9 times in a row. So that's an important concept in trading. All right, well, the last question I'll answer, it's not really a question, but someone said, I'm long on ETH at 1160, but I'd like to keep it until 13,500, but sometimes I don't know to take profit as I don't make big trades. I have a saying, And there's a caveat to this isn't how you should trade forever. But my saying is, if you're in meaningful profits and you have no plan when to take profits and how to get out of your position as a winner, just take profits and set your stop loss to entry. Now, the caveat to that would be that you should have a plan, and you should develop a system and be experienced in that way. But if you find yourself in a position with meaningful profits and you don't know when or why you would take profits, just take profits. And you could say, but what if price goes up? What if price goes down? Yeah, could do those, but you don't have a plan. So I just book some profits. Brains is asking, if you're seeing bullish absorption and seeing a ton of shorts opening up, is there usually a pretty high chance of those shorts getting squeezed out? Typically, I would usually prefer that it be at a key level though. So if there's lots of shorts opening, but price is coming towards a key level, I would prefer to wait for the key level to be tapped. But then if you start seeing a reversal, and shorts are opening aggressively, I'd pointed out there were quite a few shorts opening down here as we approached the POC. Here we didn't have any bullish absorption, but I point out that we have shorts opening out the POC. This could help with a short squeeze. I would say it's just a great confluence. I mean, it's just the logic is if there's a lot of shorts, say there's a ton of shorts that opened here, and then price starts moving above the shorts. The logic is it's going to push price higher because those shorts are likely to close, and shorts closing puts buying pressure into the market. So if price starts putting shorts underwater, there's more and more pressure for them to close. When they close, it's likely they push price up to some degree, and that can be on a bunch of different time frames. So if you see shorts opening, you see price absorbing those shorts and moving up, then they're more likely to get squeezed out. If they get squeezed out, they're going to cover and price is going to go up. So that's the logic of it. I don't think it's too complex in that sense. Like it can feel complex when you're trying to figure out, like, is there bullish absorption? There's shorts opening, but are they going to get squeezed out? We don't know. But the reason that bullish absorption or bearish absorption puts the probabilities in our favor is it's a very simple logic. If you just imagine you were the only trader short and you open shorts here and price starts going up, well, you're going to close your shorts. Likely. You might hold them, but if you're the only trader in the market short, and there's only one person on the other side of your trade, well, then they have an incentive to just keep pushing price up until you close your shorts. And as soon as you close them, then they have an incentive to reverse price. And if you close them and then open longs, well, then now the liquidity is down here. And if there's only two traders battling for liquidity, short and long, if you close all your shorts and open longs and the other trader has more capital than you, well, then they have an incentive to push price down for you to cover. It doesn't really work with only two traders because price would just be teleporting between levels, but that's the general concept. Yeah, so somebody's asking, and I'm going to wrap it up here soon, if I can please not leave and stay on till the weekly close, which is about an hour and a half away for smaller traders. Yeah, no. I think what people are hoping is that something happens, and then I say, like, I'm shorting on a live stream. I mean, I do typically give those updates in the members group, but I've given my idea here. I mean, I'd be interested to see us tap this point of control, maybe swing failure this, and I would just take a short with risk management. Could either trade it as a swing failure with a short above the new, or stop above the new high, or above this wick, but then we could push up and sweep that wick as well. Just, it depends. You know, I'd like to see a lot of shorts getting stopped out, a lot of volume coming in, signs of weakness, and then you just take the short without thinking about it too much. Okay, I'll finish off by answering Brains's question here. If you're around a key level, then are you just looking for like a swing failure or something? How do I determine if I'm going to enter, if there's bearish or bullish absorption? It completely depends on the scenario. I mean, here I just entered off of the tap of the key level. We got a balance. We swing failure this low. I just entered. So if I have a swing failure and I'm interested, there's a key level here, and I'm looking for a swing failure. We see that big move. Well, I'll enter off of that. If there's no swing failure set up, and it's just there's a fib retracement here. Pretend this is a fib retracement. Maybe I might look for something like this, a bounce, and then maybe we get another move down, and there's huge bullish absorption here between these two lows, or bullish absorption, I might just enter there. There's no swing failure, but I'm just entering off the bullish absorption on a low time frame as price comes and retests support. So there's different ways you can use absorption to inform an entry for sure. The big thing is, like, I try not to hesitate. If I had an idea of longing this point of control, and it's like, oh, I hope we get it. This is what happens to most people. And then price finally gets there, and then they freeze. And they're like, I don't know what to do. Should I long? Should I wait for this? Should I wait for that? It's like, if I'm sitting here, I see the bounce, I see all the shorts opening, I'm just going to take the long. I can just manage my risk. It's not the end of the world if the trade doesn't work, but I'm not going to sit here frozen and then price starts going up. And I get DMs all the time from people in the chat where I'll be doing updates, waiting for this point of control, on high alert, waiting for this point of control for a long, and then I'll say I entered long, and then price starts grinding up, and people are like, I didn't long, can I long now? I wasn't sure if I should long that. It didn't look like it was going to bounce. It's like, and now they're just in this weird position where it's so easy to find yourself there, where you have a plan, you don't execute, and then price just starts moving away, and then you're hoping for a retest, and you're going to long on a swing failure or a retest, but then even that comes, and you again don't long, and you're just looking for some way, because I think even if people know this isn't true, subconsciously they're looking for some certainty that price will bounce before they put their position on, because they're afraid of taking a stop loss, and there's no way to be certain. If you have a plan, just take the trade and let it play out. And, people are often like, well, where do I put my stop so I don't get stopped out? There's nowhere to put your stop so you don't get stopped out. You just want to put your stop somewhere that makes sense. And if you get stopped out, you get stopped out. And so that's what people, like, there's this like balance between, someone says, well, I don't want to run a stop here because it's really likely I get stopped out if I put it like a cent under my entry. So maybe I'll put it here, but what if price swing failure? So maybe I put my stop way down here, but then they don't adjust their position size, and they say, you know what, there's no way we're going to go down to 15,400. Yes, I'll lose half my account if we do, but that's just not going to happen. And then that happens, right? So, where does it make sense to put a stop here? You have structure here, you have structure here, or you could put it under a swing failure. These like impulse structures can be really useful, but they're also liquidity areas. And if you get stopped out, well, you get stopped out, you can look for a new position. But yeah, I think it's generally a good idea if you have an idea of longing this point of control, you could long it as a swing failure. That's an example I gave as we were approaching this level. Said, it could make sense just to wait for the key level to be tapped. And as soon as this level swing failure, well, you have a long trigger and you put a stop under the new low. That's one setup. Or you can trade it wider as well. Someone's asking, what is the concept of bullish absorption? It's an order flow concept, longs and shorts, marketing into limit orders. I have quite a bit of content on it at the Lucky Apes Trading Floor members group. But yeah, it's not something I can really explain or will explain here. It's just an order flow concept. All right. Same with swing failures, and people are asking, how do you define a swing failure? There's a lot of questions in here, all the way from how do you open a long or add to a long position? How do you tell if a level is claimed or reclaimed? How do you pull a volume profile? Where do you pull it from? What's a swing failure? What's bullish or bearish CVD absorption? I have content on all of that, and I teach that stuff at the Lucky Apes Trading Floor. Personally, this is a personal opinion. It does not mean you have to join that group, but I don't think you should be trading. There's no sense in trading if you don't have a basic foundation. There's so many people literally just opening positions based off of wicks going up and down, essentially, or candles going up and down. They have no foundation for risk management, no foundation for any technical ideas, and yet they're putting major capital at risk in the market every day. To me, that just makes zero sense. So by whatever means you want to do it, take some time to learn and educate yourself and test your trading systems before you're diving into the market. Brain just saying, also the LITF is one of the best investments you can make in your trading journey. Highly recommend. I tend to agree. I think even for people who, whether you're a brand new trader or a more experienced trader, I think the value you're going to get from it is different. And for some people, it may just be as simple as learning all these concepts or starting to learn them, and then just saying, oh, I understand now why this is important and what the journey looks like and what I need to develop and learn. And then they just say, it's not for me. I think a lot of people could just benefit from the reality and learning the reality of trading, and maybe just say, hey, you know what? This isn't actually something I'm interested in. And I understand that if I don't do this, it's pretty much going to be impossible for me to consistently make money. So it was a good experience to learn more about it, and I'm not interested. And then for other people, it inspires a complete passion, right? And they love it. They're like, wow. And they see the path and they say, hey, I want to do this. I believe I can do this. I understand what the path looks like, and I'm going to do it. Yeah, Brain's just saying he signed up for 1 month with a plan to cancel and has been there for 5 months. And I think, again, it really goes to what you're looking for, right? Some people do join for a month and then cancel. And some people, it's a complete no-brainer to stay in there. Because it's not just even the stuff, my daily updates or the stuff that the educational materials. There's a whole community developed there where people are sharing their journey and their ideas, and it's only going to get better and better. And then there's going to be some really cool stuff with the paper trading platform coming for members and for non-members as well, but for members particularly. All right, guys. Well, thanks for tuning in. Hopefully this wasn't a typical live stream. I just kind of was chatting. But I really wish you all a happy holiday, Christmas, whatever holidays you're celebrating. Obviously a new year. Hopefully we can finish the year strong with a nice long off the PLC, and then we can have a strong 2023. Somebody else reiterating, the LITF is the best investment you can make for a new mid-level trader. Somebody else saying, even with 1 to 2 months in tier 1 with the other members has been very helpful. Yeah, I mean, I think it's a no-brainer. If you are trading with capital and you're interested in trading, and there's traders who have been trading for a decade that say it's the best investment they've made. But especially if you're a new trader and you have no foundation or very little foundation, it's just, I would have a hard time with making the argument that there's not going to be immense value for you. Because, I mean, you're just going to excel, especially if you have the time to go through the educational content. I don't know. Yeah, it's such an easy value offer. And whether trading is something you want to continue doing or not, I think it's going to be all of this is important stuff to learn. So, all right, guys, enjoy your holidays, and we'll see what happens here into the weekly close, and I'll obviously be giving some updates here.